Welcome back to Based Wealth, where we share practical strategies for building wealth from scratch. In today's episode, we'll delve deeper into the key steps you need to take to achieve financial abundance. Building wealth is a journey that requires careful planning, discipline, and a long-term perspective. So, let's dive in. When it comes to building wealth, it's important to be selective about the advice you follow. There is an abundance of financial information available, but not all of it is trustworthy or relevant to your specific situation. Seek guidance from reputable sources, such as financial advisors or successful entrepreneurs who have achieved the kind of wealth you aspire to. One crucial aspect of wealth building is understanding your risk tolerance and investment goals. Don't be swayed by get-rich-quick schemes or the latest investment fads. Instead, focus on long-term strategies that align with your financial objectives and risk tolerance. A diversified portfolio that includes a mix of stocks, bonds, and other assets can help mitigate risks and maximize returns. For example, let's say you receive advice to invest heavily in a particular stock that promises astronomical returns. It's essential to conduct thorough research and consider the potential risks involved. Seek professional advice to ensure that your investment decisions align with your long-term financial goals and risk appetite. Choosing a high-income career or starting a business with income growth potential is a significant step towards building wealth. Look for fields that are in high demand and have the potential for growth. Consider the skills and expertise you possess or are willing to acquire and align them with market trends and opportunities. When starting a business, it's important to focus on scalability and innovation. Look for ways to leverage technology and create systems that allow your business to grow and generate higher profits over time. Be prepared to invest time and effort in building your brand and establishing a strong customer base. And remember, perseverance is key. Building a successful business takes time and dedication. For those pursuing a high-income career, continuous learning and skill development are crucial. Stay updated with industry trends and invest in professional development to enhance your value in the job market. Seek opportunities for career advancement or consider acquiring additional qualifications that can lead to higher-paying positions. Starting to invest early is a powerful wealth-building strategy. Compound interest is your best friend when it comes to growing your wealth over time. By investing early, you give your investments more time to grow and benefit from compounding returns. One of the biggest mistakes I see people make is waiting too long to start investing. Even small amounts invested consistently over a long period can have a significant impact on your wealth. Take advantage of retirement accounts, such as 401k or IRAs, and explore other investment options that align with your risk tolerance and financial goals. Remember, time is on your side when it comes to investing. Consider the following scenario. Suppose you start investing $100 per month in a retirement account at age 25 and continue doing so until retirement at 65, assuming an average annual return of 7%. By the time you retire, your investments would have grown to approximately $317,000. However, if you delay investing until age 35, the final amount would be around $160,000. The power of starting early is evident. Saving diligently is an essential habit to cultivate on your path to wealth. It allows you to accumulate capital for investing, emergencies, and future opportunities. However, saving is more than just putting money aside. It requires discipline and conscious decision-making. Building a habit of saving starts with understanding your income and expenses. Analyze your spending patterns and identify areas where you can reduce non-essential expenses. Create a budget that allows you to allocate a portion of your income towards savings. Automate your savings by setting up automatic transfers from your checking account to a dedicated savings or investment account. This way, you won't be tempted to spend the money before saving it. For example, consider the 50-30-20 rule of budgeting. Allocate 50% of your income towards essentials like housing, utilities, and transportation, 30% towards discretionary spending like entertainment and dining out, and 20% towards savings and investments. By following this rule, you prioritize saving while still enjoying your income. Creating multiple income streams is another critical aspect of building wealth. Relying solely on a single source of income can be risky. By diversifying your income streams, you can increase your earning potential and build a more secure financial foundation. One way to create additional income streams is through real estate investment. Consider investing in rental properties or real estate investment trusts, REITs, that can provide passive income. Real estate has the potential for appreciation over time and can serve as a hedge against inflation. However, thorough research and due diligence are necessary before venturing into real estate investment. In addition to real estate, explore other investment opportunities that generate passive income, such as dividend-paying stocks or bonds. These investments can provide a steady stream of income while you focus on your primary career or business. Diversifying your income streams helps protect against potential downturns in any particular market. Budgeting is a foundational skill for wealth building. It allows you to gain control over your finances, identify areas for improvement, and allocate your resources wisely. Effective budgeting starts with understanding your income and expenses. Categorize your expenses into essentials and discretionary spending, and look for opportunities to reduce non-essential expenses. Set realistic financial goals and allocate a portion of your income towards savings and investments. Remember, budgeting is not about deprivation but about making intentional choices that align with your long-term financial aspirations. Consider implementing the envelope budgeting system, where you allocate cash into different envelopes for specific expenses like groceries, entertainment, and transportation. This system helps you visually track your spending and ensures that you stay within your budgeted amounts for each category. Investing in yourself through education is a critical component of building wealth. Acquiring new knowledge and skills can increase your earning potential and open doors to new opportunities. Continuous learning is essential in today's fast-paced world. Invest in courses, workshops, or certifications that enhance your skills and make you more valuable in the job market or as an entrepreneur. Consider pursuing higher education if it aligns with your career goals. Developing expertise in a specific field can lead to higher income potential and increased opportunities for advancement. For instance, if you aspire to become a software developer, investing in coding bootcamps or online courses can help you acquire the necessary skills and stay up to date with industry advancements. Similarly, entrepreneurs can benefit from business development programs or mentorship opportunities to expand their knowledge and network. And there you have it. Key steps to achieve financial abundance and build lasting wealth. Remember, building wealth takes time, patience, and consistent effort. It's not an overnight process, but by implementing these strategies and maintaining a long-term perspective, you can pave your way to financial success. Thank you for joining us at Based Wealth. Like, comment, and subscribe. Stay tuned for more insights and tips on building wealth from scratch. Until next time, keep striving for financial abundance.